crypto markets failed to rally despite a strong recovery in tech stocks, gold taking out the highs, and the dollar under pressure. All macro eyes on Jackson Hole this week, but front-end vol sellers return as Bitcoin remains trapped in a range and loses its correlation to risk assets as a supply overhang and political swings dominate sentiment. All this and more in this week's Crypto Options Unplugged. Welcome back, everyone. It's Imran Larker from Options Insight, and this is Crypto Options Unplugged. I've got my man Dave from FRNT here today, and it's a bit sleepy, isn't it, in Bitcoin at the moment? What's going on, Dave?
Summer markets, summer lull, sideways drift, and annoyingly, it's crypto, right? TradFi markets are actually interesting for
They are on fire.
yeah. They are on fire. Obviously, huge turnaround from the yen carry unwind sort of FUD. As we spoke about,
you did say buy the dip.
Buy the dip, and it's
but unfortunately not in crypto. That didn't work.
But it was never a carry unwind in the sense of like the big carry funding unwind, but more for me a levered momentum trade blow up.
Yeah, a bit of a risk liquidation.
I know there's still a lot of bears out there that think this is just the dead cat bounce, that we got the main event to come. I don't buy
praying for a dip, basically.
Yeah. And then we're in quite a Goldilocks period for risk again. And that being, we had.
What do you mean by that? For people who don't know.
Yeah, so we're in this perfect little environment where we've got a disinflationary economy. We had softer CPI again last week, soft PPI. So inflation's coming down. You've got the US economy that's slowing, but we've kind of got this soft landing scenario again. If you think back to a couple of weeks ago, everyone was worrying about recession.
Jobs market was rolling over.
Exactly. Now we had like solid retail sales.
Retail sales was a blowout last week.
Yeah. I think it's best month number in like 18 months or something. So the US consumer still looks like it's doing all right.
It's tricky, isn't it, to know like how the market's going to react to good data and bad data.
Yeah.
Because often bad data is good for the market because it means dovish rates, etc.
Yeah.
So that means good data should really be bad for the market because it means hawkish rates.
Yeah.
But there was kind of this shift towards the market caring more about growth.
Yeah.
Inflation's kind of less of a concern. We kind of know that's heading in the right direction. And then we're worried about jobs. We're worried about growth. And then that retail sales number was like, actually, we don't need to worry as much. Right?
And this is why I say as well about the Goldilocks scenario, because like good data becomes bad data if it means it's going to stop the Fed cutting or even, force them to start hiking rates again. So
we're nowhere near that. So
when you've got data that's, not us going into deep recession, but also is not going to stop the Fed cutting rates, that's the Goldilocks we're talking about. And
we're 75% priced now for a 25 bip cut in September, right?
And there was even a report out yesterday that on the Jackson Hole on Friday that he might still keep open the option.
Why would he do that? I don't see the incentive.
Yeah, I mean, it could as well sort of work against them in that people might go, oh, what are you seeing that you still feel the need to go 50? But whether he wants to give himself some optionality, whether again, like they're looking at the kind of disinflationary path and thinking actually to ensure the soft landing, we can kind of get ahead of that a bit and be a little bit more aggressive up front. I don't know. I mean, my expectation is still that they'll go 25 and just maybe do sequential 25s or what have you. But either way, we're coming into this rate cutting cycle. The US economy is slowing. I still think we go into a mild recession, but not deep recession or anything that markets need to fear. Major central banks elsewhere are cutting rates. China.
So we get it. The macro's good.
The macro's good.
Why is Bitcoin not rallying?
So thinking about this, and the other thing as well, which is, so within the macro framework, rates moving the right way, liquidity is improving, right? The dollar, which is another big input, right? And there's actually another kind of eases liquidity, that's falling. Risk is looking pretty stable. Positioning is negligible in crypto. So we have all the ingredients for Bitcoin to really ramp. I think at the moment the reason we're kind of diverging from other risk markets is just the supply overhang, and trying to digest that supply overhang.
From who? The US government, is that?
So last week we had more FUD around the US government and the Silk Road sort of holdings. They moved around $600 million worth to a Coinbase wallet. Although again, doesn't necessarily mean they're going to sell that.
Has that actually been sold though?
No, exactly. So,
but what does it do? It makes other people front run it because they think it's going to be sold.
Exactly. Yeah. Right. And you know, you think over the last month or so, we've digested all the selling from like the German government. You've had the Mt. Gox distribution. So I just
Kamala Harris odds are rising.
They're right.
That a problem for
I mean,
crypto?
and actually, in fact, it was interesting because I still think I don't try and read too much into these little moves. Like we're kind of dancing like in this 58, 62K range or whatever. But last night we've obviously had a little bit of a pop back above 60K towards that 61K. I didn't see much of what went on at the DNC convention, but Trump's odds started to rise after that.
Right.
Yeah, I guess for Kamala, she just needs to not say anything. So when she speaks, Trump's odds are going to go up. So yeah, so you've got maybe some of that.
That is pretty ludicrous if that's the world we're in, right? Where a politician is more likely to win if they just keep their mouth shut.
Yeah,
I don't know what world we're living in.
Unfortunately, it's the caliber of
unreal
of politicians or lack of. Yeah, so I think we're digesting the supply overhang. I think the macro, everything looks good now. I mean, it's like everything's looking good. So and then summer markets, I just think there's a lack of commitment to risk. So we kind of just need real demand to come back into the markets. If you look at volumes on exchanges, they're fractions of what you'd normally expect. So I just don't think, like, everyone's on the beaches, no one's really playing.
Yeah, it is summer.
We need the offsetting demand to come in.
If you haven't got a big story to drive things, then yeah.
So, but yeah, I think rest assured, I think we're in a really good space. Everything's lining up. Let's say as we get into Q4 and people return from holiday, I really do expect we're going to kind of take a run and challenge at those highs, and we're going to have a good Q4.
On the options side, we mentioned last week trade idea about sort of buying November optionality calls, maybe if you're bullish for a potential Trump win, and then selling September calls against it. That's pretty much been the trade. I don't know if it's like I said it and then everyone started doing it, but basically it worked. September vol got battered relatively. November held up pretty well. So that calendar is steepening in Bitcoin. And obviously because Bitcoin's got more the political driver than Ethereum move was a bit more normal. So the front of the curve kind of collapsing as realized vol just keeps stair-stepping lower. So yeah, market's trapped in a range, realized coming down, front end getting battered in Bitcoin as those gamma sellers get empowered because it's summer and we don't seem to be able to break in the range. But that November vol is holding and starting to price in quite a lot of event premium. So like the forward volatility for that month that contains the election is like in the 80s, whereas the vol for the month before is like in the 60s, right? So you've got quite a decent elevation there for that excess movement, right? And then skew, we had a little bit of call buying come in to drive Bitcoin skew back into call premium after the weekend. So front end got smashed into the 40s. And then some people came in and thought, okay, we'll buy some cheapy lottery tickets for Jackson Hole in case they say something, right? So, but outside of that, the flows are pretty dire. I mean, the volumes were about 50% down week on week, right? So they're more normal. I mean, the week before was crazy because of the sell-off and the liquidation, but we are in summer normal volumes. Things pretty quiet. So not a whole lot to say really on the vol side. So anyway, you got to catch up with a very special guest this week, right? So someone a bit different to who we normally bring on.
Yeah,
right?
It's certainly a good time to sort of catch up. So Meltem Demirors, founder, general partner of Crucible Capital. I mean, she doesn't like being called an OG, but sorry, Meltem, you're an OG in the space. Former chief strategy officer at CoinShares. I was at DCG sort of back in the early days as well. So super experienced, sort of been through many cycles, now building her own VC company. Really, really interesting conversation around, you know, A, her journey through this space, and B, how she's seeing it now and the direction we're going in and how she's structuring her portfolio around that. So yeah, take a look at this, check it out. Hope you enjoyed the conversation.
Hi guys, really excited today to be joined by a crypto OG, I think it's fair to say, and the founder and general partner of Crucible VC, Meltem Demirors. Meltem, welcome.
Hi, it's great to be here. Thanks for having me. I don't know that OG is what I'd go with. Just brilliantly
Oh, you are.
started. No.
I think you are. I mean, I feel like you don't need any introduction, but for those who don't know who you are and sort of what you're up to, it'd be great to hear a little bit about your sort of journey through crypto, what you're up to now at Crucible VC, and yeah, be very interesting to hear about it.
I'll keep this very brief. I think everyone, what I love about this industry is everyone has an origin story. And so it's always fun to get people's origin stories. So I'll just give a quick overview of mine. I started my career in the commodities industry, focused on oil and gas. I was in Houston, Texas, lived through the days of the shale boom, and just really this really interesting era in commodities that emerged as a result of technological innovation in the form of hydraulic fracturing, i.e. fracking, which was a new technology to extract natural resources kind of on the exploration and production side. And then simultaneously in the early 2000s, the commodity industry went through a massive, massive boom thanks to financialization, obviously the advent of electronic trading, the introduction of commodity derivatives, and really the growth of the commodity derivatives market. And I think those two forces kind of taken together created this really exciting time in the commodities industry, this commodity super cycle, if you will. And, along came the great financial crisis, the GFC in 08, 09. That's when I was sort of on the trading side. So I had a lot of really interesting, sort of unique experiences living through that era. The advent of carbon markets, lived through some of that, which is why I'm so skeptical of just carbon instruments generally. We can get into that later. And then spent 5 years working in the oil and gas industry, a variety of roles, variety of firms. Then I did what every sort of mid-career, like mid-20s, late 20s career person does. I was like, I don't know if I want to work in corporate America my whole life. Like, I'm going to go to grad school. So I went to MIT for grad school. At the time, I had learned about Bitcoin. I was interacting with Bitcoin kind of personally, but not extensively. I was like, this is weird. I've never really thought about like money. Nobody's really ever asked that question. So, like, interesting. And then when I was at MIT, there was a lot happening on campus. Dan Elitzer and Jeremy Rubin, who are like definitely Bitcoin OGs, had started the MIT Bitcoin Club. I had started the MIT FinTech Club, which was really more focused on sort of the fintech side. I learned about startup and venture capital when like I got to grad school. I was like, wait a minute, people will give you money for ideas. I want in on that. So anyway, spent 2 years in grad school. And then as I was nearing the tail end of that, I met Ryan Falkus and Barry Silbert, who were starting this firm, Digital Currency Group. Joined them. My first day at DCG was 4/20/2015. So that's like a fun, the 4/20/69 love of in crypto of like these funny, naughty numbers. I don't know, neither here nor there. I just find it really entertaining. And then, so I was at DCG for 3 years, built that firm. We launched it in the fall of 2015, left DCG at the start of 2018, was going to take some time off, started angel investing because I actually had money like for the first time in my life. So every time I had money in my checking account, I would just give it to interesting founder or someone working on something I thought was interesting. And then met the CoinShares team. They're all ex-commodities guys, right? They had sort of spun CoinShares out of Global Advisors, which was one of the first commodity hedge funds. So I joined CoinShares, spent 5.5 years there growing that business. We took it public in 2021, continued investing as an angel, started building the investing book at CoinShares, and then left at the start of this year. And now, we're just thinking, what do I want to do with my time? What do I want to do with my energy? And the reason that I kind of told that little bit of a meandering story about my background is I think we're now at this really interesting inflection point. The commodity super cycle is back, right? This time it's driven by AI and the demand for high performance compute and the way that's going to, in my view, radically reshape our physical world. Also by just the growing incompetence of institutions and sort of these really brittle monolithic corporations that are completely incapable of adapting to and dealing with just the tremendous change that we're seeing in demographics and sort of supply and demand, in consumption patterns, in just models for how things get built. Like at its core, I think we're experiencing this really fascinating paradigm shift. It's driven by technology, but it's also driven by markets. And that's where the crypto story comes in. You and I have lived through this. Obviously, Deribit has been a big part of the financialization of Bitcoin and financialization of crypto. But we now have these amazing new financial primitives. They trade 24/7, 365 without intermediaries, without necessarily having centralized counterparty. And we basically have built this entire infrastructure that's really optimized for agents, right? It's optimized for these digital entities, for people in no jurisdiction who sort of operate outside the confines of the traditional institutional structure. Highly financialized, lends itself really well to financial engineering, sort of these various new and novel ways. So I just said to myself, okay, I haven't stopped talking about this idea for the last 5 years. I've been investing in companies in this vertical. I'm going to build a firm around it. So Crucible Capital is a investment firm. The first strategy is venture, but I think venture itself is also changing. We see this sort of with the growing demand for credit and other sorts of financing within sort of this world of AI, right? Like not everything is venture backable. Not everything requires venture capital. So my hope for Crucible is to build it into a multi-strat firm that is squarely focused on this intersection of digital infrastructure, physical infrastructure, and this exciting world of commodities, as we call them, and how they will develop.
Yeah, well, that's really interesting. I think what's quite interesting is kind of your thought process and through the experience of the commodities super cycle. I work for FR&T Financial, and we're building essentially an investment bank for the digital asset space, and it's very much a similar thesis in so much as, you know, when you think of the 90s and that commodity super cycle, you had all these niche kind of commodity focused investment banks springing up. And it kind of just feels a really obvious thing for us at FR&T that we'll have those niche, investment banks that are focused around digital assets. So I really kind of like the sort of thought process on what's kind of delivering you to what you're doing now. So what within that? So what's the, like, how you have sort of approached this? How you sort of making this sort of structuring an investment thesis around it? What sort of things are you looking at?
Yeah, so maybe I'll just start with how a firm gets built, and I'd love to hear how you're thinking about it from that FR&T financial side as well. I think for me, one of the things I've learned over the last 9 years now in building investment firms in the crypto space is it really starts kind of with what I call the tip of the spear, which is what are entrepreneurs and innovators doing, right? Like what are the new things that are getting built? At DCG, it was really the portfolio of investments, right? Which were balance sheet investments. They're not in a fund structure, that led to the creation of Genesis Capital, the lending business, Foundry, which was sort of the infrastructure, sort of computing business, HQ, which was the wealth management business, which I believe has been wound down and not that close to DCG anymore these days. But it was really by investing in this portfolio of companies and building an ecosystem of companies who could play synergistically with one another. So the portfolio really was like a 1 + 1 = 3. The sum of the parts is worth more than the whole kind of situation.
Yeah.
Or the whole is worth more than the sum of the parts. I don't know. The idioms confuse me sometimes. But it's basically it's really interesting view you get. And the same thing at CoinShares, right? I got us into the Solana ecosystem early on. Why? Because I was just seeing what was happening in that ecosystem. I got really excited about it, put Solana on the balance sheet, started investing in companies in the Solana space, and that's worked out, quite well. And I think, again, just being early to the innovation ecosystem, you start to see inefficiencies, opportunities that can't necessarily be resolved by technology, but require capital or services of some kind. And those, I think, are always interesting spaces to build in. And then you can actually bring in some of the technology from your portfolio or things you develop in-house, sort of serve those needs. So I think for me, it always starts first and foremost with venture. And I'll be really candid. The categories of companies I'm investing in, sort of this, I don't like the word thesis, but this view of the world that I have, I think, is not yet consensus. the way I sort of view it is I have a directional heading, right? And I'm more convinced than ever that the direction I'm headed and the direction the world is headed is 100% correct. Like it's absolutely going to happen. I had that vision when I got into Bitcoin almost a decade ago, right? I was like, this is inevitable. It is going to happen. It is a question of how, where, when, why, etc. But I know that if I stay on this correct directional heading, right, like that is going to work out well for me. And I just need to keep putting one foot in front of the other. Like the week after I joined DCG, Bitcoin went from $250 to $125. And I was like, well, fuck me. That's great. That's really just great. And I was already feeling, like I had taken a big risk there, raising capital for a Bitcoin company in 2015 after Docs, after the Silk Road, like, woo, yikes. Similarly, I think as we look at this vertical, people look at physical infrastructure, people look at hardware, especially venture investors, and they're like, yikes, disgusting, right? Don't want to touch it. But the world is changing. One thing I've been saying for a while now is the era of bits and bytes, I think, is coming to an end. And we're going back to the era of atoms and electrons, right? If we think about sort of like meta, zooming out, philosophical, what drives humanity forward? It's thermoeconomics, right? It's how do we allocate electrons and atoms, these building blocks of our physical reality, and also our digital reality, by the way. Like anytime we do anything online in the digital realm somewhere, there is a computing device, i.e. a chip, and there's electrons running through that chip, right? But I think we're sort of seeing this pivot in investing where people are saying, okay, like this bits and bytes thing, software eating the world. We've done that for a minute, and now we need a new generation of infrastructure and hardware to create sort of a step function increase in capability that will allow this next generation of software companies to get built. And so what does that mean? How does it translate? I think of it in 4 key buckets. Again, very early, right? Like this is early. It's not necessarily proven. I think we have some early primitives or some early examples. When we talk about it, DePIN is the category that comes to mind for most people. DePIN stands for Decentralized Physical Infrastructure Networks. Here, I think the primary example that comes to mind is Helium. Helium's been around for a long time. When they pivoted to crypto in 2017, what most people don't know is they were actually Series C company that I had met through FirstMark, was an investor in DCG, and they sort of pivoted to a token-based model because, they'd just been challenged to find growth. And Helium, in their crypto iteration, have been working on this for 6 years. So these are not short timelines. These are quite long timelines. But Helium's sort of the model everyone thinks of, which is sort of distributed, decentralized, wireless. They started out in sort of a different category, focused more on IoT. Now they're focused more on consumer wireless. And they've, over the last few months, sort of started evolving to become this base layer for all sort of DePIN or various types of infrastructure networks. They're launching an energy-focused chain. They have their mobile token, which is for their own MVNO, their mobile virtual network operator. Like, so Helium's a prime example. One I think is really potent is Render. I've also known the Render team since 2017. Render started life as a company called Otoy, and they are still around as Otoy. That's just the regular non-crypto version. They do high sort of compute load render jobs, typically for Hollywood studios. So they do a lot of like CGI special effects. Now with the advent of digital art and sort of the democratization of rendering sort of these high quality graphics tools to a broader audience, and the NFT boom, right? Started getting utilized by more and more sort of artists, freelancers who aren't necessarily signing like a couple $1 million SLA service level agreements. And so they built this network, the Render network, basically like they call it Airbnb for your GPU. Maybe that's like now not used anymore, but it's people who have a high performance GPUs, like RTX 4090s and up, can make them available for jobs on the network. People who have jobs they want done can submit them to the network. And then there's sort of a native token that aligns incentives. And now this model has sort of proliferated. So DePIN is sort of one category, but I think it's much more complex than that. And I recently shared some slides that I'm now turning into like a little blog post, because I was told slides are for boomers. So apparently I am a boomer. I'm fine with that categorization, but I've been told to write it out. So shout out to Kia Masseri for giving me a lot of shit and also sending me a draft my size is a blog post. So maybe Angel, thank you. But I think the other component here is like, we're also going to create, with all of this new physical infrastructure that's coming online, we're going to create net new digital commodities. So the process of commodification, right? It's taking things that are sort of these discrete, these things that are maybe not fungible, not discrete units, and sort of standardizing them and turning them into discrete units. Like if I trade a barrel of oil, I know a barrel of oil is 42 gallons, right? If I trade, onions, I know what the standards or features of that contract are. For compute, we don't really have that yet, right? Like we went from people having to buy bare metal, deploying that bare metal on-prem, a really high CapEx, really high OpEx sort of thing. The cloud, which allowed people to procure compute, without having to deploy CapEx or OpEx, and scalable, right? That's why all those companies are called hyperscalers, because they just have these tremendous sort of vertically integrated data centers that are typically co-load with a power source as well. But now we have cloud, and even within sort of the cloud, there's starting to be this emergence of this idea, like, how do we make compute fungible? Can we create a forward curve that allows consumers of these types of compute resources to hedge out some of the risk and some of the volatility associated with pricing? Some of these tools actually exist internally within AWS, which is a thing people don't know about, but there's really no global market for compute yet because it's not a commodified resource. It's sort of constrained by the specific hyperscaler you're working with. And even then, I think like the ability to sort of fine tune your cost parameters, your performance parameters, is quite limited. But I think this idea that we're going to see net new digital commodities and the emergence of new markets that allow for more financial engineering for companies who consume compute or energy is definitely spot on. And there's probably a variety of new digital commodities. I think we're going to see compute commodities, connectivity, storage commodities, as well as others that will emerge. I also think we'll start to see new markets for energy, like power, I think has historically been a really poorly understood market. We just had, the capacity auction happen in the Northeast that cleared at 10x the price they cleared at last year, right? Because a lot of people don't know, like producers are buying power commitments typically a year ahead. So there are these really interesting and intense dislocations happening as a result of really fragmented and poor market microstructure. And I think crypto has sort of demonstrated, its power in creating these global unified markets. And I think it'll start with synthetic derivatives first. Anyways, could delve more into that later. So that's kind of vertical 2. Vertical 1, DePIN and token incentivized research networks. Vertical 2 is net new digital commodities and the markets they'll trade on. Vertical 3 is new digital infrastructure. So I think there's still L1s that will get built. I'm now really excited about projects that are moving further down into the networking stack. So right now what we see is like there's sort of base layer Bitcoin, Ethereum, Solana, et cetera. And people are building upward in the stack by adding these layers on top. I think there's a lot of interesting work to be done. Networking layer, potentially even the hardware layer. So I'm interested in people constructing sort of net new L1s that leverage different consensus mechanisms, hardware in different ways. And then the last category is aggregators and marketplaces. So obviously tooling, managed services, like orchestration tools, really important. Where's the demand going to come from? I think the AI economy, the agentic economy is going to drive a lot of demand for this stuff. I don't necessarily know that it's all going to be humans and corporations. So really interested in that final sort of component. What the splits are between those categories, don't know. Again, this like high level, I've been at it for a couple of months now, but really just learning. And I think it's important to be really flexible, and the market decides what's right. There's a great, I think CNS Holdings, which is Dan and Bobby, always like to say this thing, which is, do you want to be right or do you want to make money? And I always sort of remind myself of that. I think people get way too attached to their ideas or their theses, quote unquote. It's like, no, look at the market, look at what the market's telling you. So then as an investor, really trying to construct a portfolio that's going to deliver performance while also sort of aligning around this direction that I believe the world and that markets are headed. I just talked a lot, so I'll stop there.
No, it's interesting. I think we definitely sort of very much aligned in that thinking. I mean, what's interesting for me is that if you've come from the traditional finance space, I feel like sort of crypto, we're essentially replicating, decades of financial evolution. We're kind of replicating in a very short space of time within the digital asset space. And it's like, the exciting thing for me is that all the things we've seen before, we have all these opportunities. I mean, like, you're talking essentially about a new type of a commodity, right? That we're seeing emerge. And then all the infrastructure that goes around that, the financialization and the derivatives that are required to hedge and provide liquidity and all these things, to allow those businesses to sort of grow and scale. That's, I think, for, a lot of us in this space, that's the exciting opportunity to just recreate things. We're almost not reinventing the wheel. We're kind of looking at things that were done, and then, how do we build on that for the digital age, replicate what was good, and obviously improve upon those things that we can improve upon. So
I think that articulation is exactly how I view it. Time is a flat circle. There's nothing new under the sun. So I like to be a student of history, which is why I often talk about things that have happened in the past as sort of instructive for what may happen in the future. It won't look exactly the same, but there will be more similarities than differences, that's for sure. Humans have been around a long time, There's a reason we keep doing these things. They work.
Well, it's funny because like Imran and I, when we sort of talk on the podcast, and through our sort of collective years of experience, I guess some might call us boomers. I'm still trying to hold on to a millennial tag, maybe, but you see it.
Join me as a boomer. We can make slides and hang out on LinkedIn, and we can page each other.
make being a boomer cool, right?
I think it's really very cool. Everyone's too like Gen Z coded. I'm old, and I like that.
Yeah, there's comfort in that. But no, you definitely. I mean, the one thing from as someone who's very kind of macro focused, like, not everything's the same, and history doesn't always repeat, but it often rhymes. And you see a lot of these cycles play out. You see them play out in markets. You see them play out in investment thematics. I mean, what we saw, like the blow up that we saw in 22, like for me was like classic of every kind of, people, the comparisons to .com and all that sort of stuff. It was just a classic, just people rushing into anything that was crypto. You start to lose a sort of lack of focus around it. Just money's getting thrown around, people taking stupid risks. Then it all blows up. And then I feel that's when we go, right, let's be a little bit more sensible about it now. AI, you kind of feel maybe has had those elements to it as well, these kind of bubble hype type elements. Although I do wonder if the AI boom has kind of come too shortly after the crypto boom for everyone to get too carried away by that. But yeah, we're repeating these cycles, and I feel we're kind of in almost in this, I don't know if it's right to call it a maturity phase, but we've gone through that kind of massive bust, and now I feel like we start building things properly, and there's huge investment opportunity out there. How do you feel, Meltem, like given what went on in post FTX and what have you? What is the investment environment like in your view? It still feels slow to me. It still feels like we're kind of in the bear market in that respect.
Yeah, I would say, there were a lot of investors who, again, we have to look at these patterns, right? And one of the things that I'm still very close with our team at CoinShares and still involved, a little bit in the day-to-day there. We put out this great weekly fund flows report where we show inflows and outflows out of structured crypto products, i.e. ETPs, trusts, et cetera, that are available to investors in public markets. One of the things I think is so interesting about crypto is you have like this really great data, because you can look at inflows, you can look at outflows, you can look at activity on chain, you can look at sort of volumes, you can look at net interest and all these other metrics, right, that give you a lot of indications around sort of positioning and market sentiment. And I think crypto is one of those interesting sectors where price is the UX, right? Like price is the story. A lot of people think, if we do like narrative really well, then the price will come. And I think it's actually the inverse. It's price action creates narrative, right? And then it becomes sort of the self-sustaining flywheel. And we've seen that certainly with some narratives in the market recently, where it's really just the story around price action, which I think is interesting, coming from a trading background, like understanding the role market makers play, I think can really help you engineer really interesting, at least short-term outcomes, right? Long-term sustaining those outcomes becomes a bit more challenging. But I think what we saw at the start of the year with the listing of the Bitcoin ETFs, it's sort of been range bound all of last year. It was quite dull. And then the ETFs were approved within the first 3 months, best ETF launch of all time. I think over 10 billion of net inflows in the first few months alone into the complex of 9 US Bitcoin ETF, which is pretty monumental. But what people didn't realize is with the addition of the ETF, right, market microstructure and flows in Bitcoin and crypto more broadly have fundamentally changed, right? So the more that Bitcoin becomes financialized through these public market proxies and these traditional financial structures, the less that we see these historical sort of cycles we've seen with Bitcoin running, alts running, and sort of this long tail of crypto getting a lift from wealth creation in Bitcoin. We're not seeing that this cycle. I know it's only August, right? So we'll let it play out. And I think it's important to be patient. I'm guilty myself sometimes of being impatient, particularly when it comes sort of looking at the market and sort of drawing conclusions. But I do think that the introduction of the ETF has fundamentally altered flow. And we see this Bitcoin dominance is at a 4-year high, right? BTCD, Bitcoin dominance, important metric, is like 53, 54% right now. So interesting sort of shift. I think how that has translated to the way investors are sort of thinking about investing. In the first quarter of this year, with a buoyant sort of market dynamic that we saw around the launch of the Bitcoin ETFs and the subsequent sort of uplift the whole crypto sector got, we saw valuations really going crazy. And maybe this was buoyed a bit by the AI boom as well, right? Venture had been sort of in a very subdued environment. Similarly, venture has seen sort of this resurgence of enthusiasm. We're seeing, the crazy rounds that we saw in 2021, 2022. Again, some of the valuations in AI definitely don't make sense. But again, these are generational investing opportunities. So for investors right now, I think it's about get into these rounds at any price because it's sort of a binary outcome, right? And that's one of the things I think we sometimes forget about as investors. Like a lot of times outcomes are binary. So that's, I think, why you saw, Monad doing around at 3 billion. The outcome there is binary. Either, it goes to zero, i.e. it's much less than 3 billion, or it's, multiples more. And so you're sort of betting on these binary outcomes in crypto. I think more than any time before as an investor, what I'm sort of internalizing and thinking through in terms of how I construct a portfolio is what are the implications for outcomes? Because I think there's much more of a barbell in crypto than before. There are the haves and the have-nots. There are the catch fires and the low die-outs. I think just generally, though, market was really active in venture in Q1, a little bit of Q2, then subdued again. Right now, there's no pressure to deploy. New funds that people are raising are smaller, less LP appetite for crypto, just generally across the board. So I think overall, what that's led to is people just being a bit more conservative. Also, the most important thing is again, price is really important. You need to get your token listed. You need liquidity. And the venues that have historically been the gateway to liquidity, they're not doing new token listings. They're not engaging with, 80, 90% of launches. They're being very selective because they're also concerned about ensuring that, they have a good user experience. And again, in crypto, price is UX for a lot of participants in this market. And so I just think we're going through this interesting shift. I have some thoughts on what it might look like. I think the future is much bigger dispersion in outcomes. I think there is this perception of crypto and VC that oh yeah, just place some chips around and oh, you're definitely going to make money. I don't think that's the case anymore for any fund after vintage 21. No, I don't think that's the case. I think being an investor is a really hard job. And I feel for GPs who have, $100 million, $200 million, $500 million fund, they have to return $1 billion, $1.5 billion. That's a lot. That's a lot of heavy lifting. Those are big numbers. So there's sort of this interesting environment right now. It's why I'm excited to have a smaller fund as well. I think just from managing outcomes, it just feels to me a bit more manageable in the current climate. But all it takes, right, is like if the macro environment loosens up a bit, if investors start going a bit more risk on, I do think there will be more of an appetite for crypto, especially because crypto funds are some of the only ones at the moment returning DPI, right, or paying out distributions. A lot of venture, I think, is really struggling to find liquidity. Great report from Carta that came out this week. If you just go to the Carta website, their 2024 Q2 venture report has really great insights on kind of what's happening across vintages for different funds. Anyways, not to be too boring, but it matters. It does matter. And the perception of crypto in sort of the investing landscape, I think currently still very expensive, seeing a lot of founders going out with really aggressive valuations, trying to accelerate their TGE to justify those expensive valuations, seeing a lot of network launches that are not going well, seeing a lot of projects, that raised a lot in 22, now trying to come back to market, not really feeling confident in doing a TGE. So it's this really interesting environment. There are a few standouts here and there that maybe you read about. I also think there are a lot of fundraisers getting announced now that were done last year, right, or earlier in the year. So it's not really a reflection of reality. But I would say there's definitely less pressure to deploy, not as many hot deals. And generally, I'm just finding things are quite overpriced, and founder expectations sometimes, I think, are not particularly realistic. I do think investors are much more realistic because we have this albatross, right, hanging over our heads. Like we have to perform. And so managing performance, I think, is going to be really important.
Yeah, for sure.
Right. Because for every project that does well, you have a whole slew of projects that don't. I mean, it's just the dichotomy is really quite extreme now. Yeah.
It's interesting what you say, like in crypto, how much like price is narrative and kind of drives the narrative around everything. It definitely feels like, we've kind of been in this summer lull. To be fair, we've been in this lull, for the last couple of quarters. And yeah, everyone, I guess, is hanging around waiting for us to take that next leg higher.
Is it really a lull?
Is it really a lull? Yeah, I think like we spoil in crypto, right? We get these really fast moves, and then when we kind of just drift sideways for a bit, everyone starts sort of getting downbeat. We obviously have these corrections that we all kind of know are going to come. So yeah, I feel we've been like consolidating. If you look at the performance on the year, we're up 30-35% or something. It's not a bad performance, but yeah, there's always this impatience in crypto, which sometimes makes me think again, like people are in it for the wrong reasons. People are only in it for number go up, because I think if you believe in the thesis and the story and the direction of where we're going, you're probably a lot more relaxed about it. But yeah, it feels like, I guess everyone got excited talking about 100K and all this stuff for Bitcoin, and it looked like we were going there very quickly. And yeah, and then we've just kind of drifted in this sort of sideways sort of range, really, which is why I feel quite comfortable about where we're at. I think the macro is looking great. Yeah. We're about to see the Fed sort of get their cut cycle underway. Globally, central banks are easing, except for Japan. China look like they're going to really now sort of start pumping the liquidity now that the pressure's off their currency. So I think we're in a really good space. But
if I may, I think one of the fundamental issues here is the expectations that people have are unrealistic.
Yeah. Yeah. No.
Right? So crypto today is a $3 trillion asset class. Okay. That's not massive, but it is quite sizable. Crypto is also becoming more financialized, right? And one of the things that's sort of inherent to this financialization is a reduction in volatility. And so I just think people are sort of unclear on what it is they want. I'm like, do you want institutionalization of crypto, or do you want vol? Like, they're two different sort of things, and I think they have dramatic implications for what future cycles look like. So I think that a lot of And again, never say never, right? Like, I don't have a crystal ball. If I did, I wouldn't be here. I'd be, on a private island somewhere. Actually, no, I'd still be here because I'm sick. I'm profoundly just sick. Yeah, I'd be here doing this. Yeah. But yeah, I just think that people are unrealistic and their expectations are very unrealistic, right? I just think it's very important to be pragmatic. And it's like you kind of want to assume the worst. And then if things outperform, you're surprised to the upside, but you kind of don't want to be surprised to the downside. And I'm always surprised. I talk to these people who are really pragmatic and practical. And then I look at their portfolio and I'm like, what? So like, I think it's hard. It's really hard. I struggle with this personally because you have this psychological anchoring to what happened in the last cycle. But I think this sort of like unwillingness to accept that strategy is no longer relevant, right? So I do think that there is this, this ideological inconsistency. And then everyone's talking about, oh, we need more liquid funds. I'm like, if you had a liquid fund, like you got carried out in a body bag over the last quarter. How's that going to work? So it still feels like we're in this process of sorting out like where flow's coming from, where inflows coming from, where outflows going, where's liquidity coming from, what are the implications based on those market participants for market microstructure, what are the implications then for volatility, like cycle times. I just think that it's very important to just sort of think practically about these things. And again, like as an allocator, my job is to be fiduciary for my LPs, of which I'm also one, right? And so it's just very important to deploy capital in a pragmatic manner that will work in a wide range of environments, of market environments. I think when it comes to rate cuts, I actually look at Polymarket, right? Which, full disclosure, I'm an investor in Polymarket. To sort of get a sentiment check, right? We started out like a couple weeks ago. I think consensus was 50 basis points. Now consensus is 25 basis points, if at all, in September. I know everyone's watching Jackson Hole closely this week, right? We've got the FOMC, but I think again, there's like this assumption that, oh, rate cuts are going to happen and oh, it's going to be gangbusters on that. I don't think that's something you can take for granted. So when thinking about what to do in this market environment, I think, yes, you want to position aggressively, but you also want to have a strategy that is going to work in a wide range of environments. And at the end of the day, one of the only things you can really control as an investor and allocator of any kind is your entry price. Ergo, like, I think the number one thing I think about is pricing, right? Is like, is there room for multiple expansion here?
Yeah.
And in some instances, I just have a hard time seeing the room for multiple expansion, particularly, on a longer time horizon. I do think narratives cycle quite quickly in crypto. You have something that's a meta in this moment in time, but it doesn't really necessarily have that persistence to be relevant in 3-4 years when you're finally liquid, right? Anyways, neither here nor there. These are just things that are going through my mind, right? Because there is always pressure to perform. You know this. You've worked in capital markets. I know this. I've been under the gun my whole entire life. So being in the right place and in the right time, heading in the right direction, very. But then your strategy, right, is also very important. And again, I think price is one of the few things you really can control for.
Yeah, it's funny as well. I often say to people, it reminds me of like the Bill Gates quote around. People overestimate what they'll achieve in 1 year, but typically underestimate what they'll achieve in 10. And I kind of think that's where crypto's at, right? It's we all see the potential, we all see the direction it's going, we all like big numbers and kind of flashing those up in terms of targets. But it's it's not all going to happen this year or. But we will probably, and given even the innovations you've spoken to today and the kind of direction and the infrastructure that's being built around all of this, probably in 10 years we'll end up in a place that you and I, even with like the most sort of bullish outlook on things, like couldn't anticipate, right? And it'll be, wow, that was bigger than we thought, because there'll be some piece of technology that comes along that just makes it all go together, and then all of a sudden, like, you know, even the bullish sort of forecast for Bitcoin and what have you, like, look quite sort of moderate. So
well, David, I'll maybe leave you with this, because I know we're coming up on time. So as I mentioned, I've been professionally working in this industry for 9 years now, almost a decade. I am honestly astonished by what has happened in the last 9 years of my career, my life. Just my career is crypto is one of these things that kind of becomes all consuming, right? I like to joke, I do 3 things. I do crypto, I hang out with my family, and I read sci-fi. I don't really do a whole lot else. It makes me sound rather one-dimensional. I've recently over the last years, gotten really into health maxing, but that's just part of the routine. But like very limited things, because crypto is really it can be so very consuming. But what I will say is, over the last decade, we have memed a global reserve currency into existence. We have built an entire financial system and capital market that clears billions of dollars a day outside of the existing capital market structure. We have seen the emergence of crypto institutions that have AUC, assets under custody, that rival that of top 20 banks in the United States of America. And I'm talking about Coinbase here, okay? That is profound. And I don't think sometimes we really sit back and appreciate just how truly profound it is. We now have presidential candidates talking about crypto as a core election issue, right? Like, these are really profound systematic sort of changes, and they've taken a long time, and it's going to take longer. But if the next decade, and like the next decade is going to be even crazier, because the rise of the agentic economy and of everything that's happening in our world is happening so quickly, insanely, so intensely. There's so much money flying around. The implications, I think, for just like the human psyche of AI are so profound, right? And so I'm an optimist. No, I'm an optimist. And I would think what's so exciting is we get to shape and direct that future. People do it in different ways. I have the privilege of getting to work with brilliant founders who have a radically different vision for the future, and to help them bring that vision into fruition and to help them shape and direct it. And that is just like a really great thing. But even what I love about crypto is, and why I hate the term OGs, like someone could join 6 months ago and be really influential today. Crypto is just one of these like really fun, interesting, amorphous ecosystems that functions purely online on Twitter, right? The cesspool that I love and hate. X.com, we're not calling it Twitter anymore. But I think it is so fascinating that anyone can show up, right? And make narratives and make things happen. And I hope it stays that way. I think it will stay that way. But that's what excites me. That's what keeps me here. I'll be here when I'm, 90 years old. I'll look like I'm 40 when I'm 90, which, like, thank you, biomedicine and science, Brian Johnson, I'll be old, sitting here on X.com, posting funny memes and witty takes on markets, and it'll be great.
Well, I tell you what, I think on that good energy note, we should leave it there. And Meltem, look, thanks so much for coming on. It's always interesting to get your perspectives. Great to hear what you're doing, and yeah, thanks very much. It's been fun
for having me, and stay sane out there. Stay safe out there.
Yeah, you too.
So yeah, that was good chat.
Yeah. I mean, it's brilliant. She's so experienced. I was so interested in this idea of like the commodification of digital assets, basically. And, this idea of, I mean, particularly like Meltem's background in oil and gas, like it's interesting when you look at that sort of commodity boom sort of back in the 90s and just the kind of the infrastructure that started to build around that. We're now starting to see that sort of built or it's coming for the digital asset space.
Yeah.
And the idea of like commodifying compute and energy and all these things, just fascinating. And I think for people like myself, like in this space, like these are like the kind of real world use cases, and this is what the future looks like, a future of finance. And
Yeah, it's not just all about number going up on these random tokens.
Yeah,
right?
which we love and we all get carried away with. But there's real businesses being built, and there's a whole new industry that's going to need. By the way, I mean, I think Meltem's estimation is that it's going to need something like $100 trillion of investment by like 2040 or something. So there's a lot of money's coming to the space. There's a lot of opportunity, and yeah, it's a really, really exciting time. And it's just fascinating just to hear someone who's, partly leading that in terms of the investments that she's making and her company's making. And how will this all sort of end up? And that's the other thing. We're all obsessing around where Bitcoin price is. We are still so early. And I think, the state of the world, even in the next 5 years, will just be kind of quite unthinkable to where we're at now. And that for me has huge implications for price as well, obviously. So summer holidays, everyone chill out around price. There's a lot of good stuff going on in the space. So much being built, and price will look after itself, I think.
All right, guys, slightly different flavor to this week's episode. We hope you enjoyed it and learned something from it, and we'll catch you all next week.